Most people, when they hear life insurance, they think somebody has to die in order for someone else to benefit. It's not a nice, it actually, they used to call it death insurance. They switched it to life insurance through marketing. More people bought it when they changed it to life insurance.
Welcome to the American Dream Builder and Investor podcast, where our vision is to inspire busy professionals, especially first and second generation immigrants and Americans, to explore the state of the American dream in 2022 and beyond. That is the Trinity of Freedom: time, financial, and geography freedom. I'm your host, Missy Laub, and I have achieved financial independence, and I'm helping many others to do the same. I started out with $5,000 and have really built wealth for my family along the process. Now I'm on a mission to help hundreds of thousands of people like me to do the same.
Welcome to episode 18 of the American Dream Builder and Investor podcast. Today, we have our special guest, MC Laubscher again, but not just on investing. We are having him talking about another important topic, becoming your own bank. I always wonder why bankers are a lot of times the richest persons in the world. Today, we get to learn more about that. And become your own bank is one of the best ways to build wealth in this world and to continue to invest as well. Now, without further ado, I'd like to tell you a little bit about his professional background first.
I wanted to give you his formal intro because he's not just a husband, a dad, he's also an entrepreneur, investor, and an educator. And on the education part, his passion is really to share how investors and business owners can create, recover, and also warehouse multiple cash flows through advanced cash flow strategies. But actually, as an investor himself, he also invests in many different areas, mostly in real estate and other alternative investment assets as well. He also is the founder of the Cashflow Ninja and the creator of the host of the top-rated business and investing podcast, Cashflow Ninja and Cashflow Investing Secrets. The podcast has been downloaded more than 1 million times over 180 countries, and has been featured as one of the top 48 podcasts for entrepreneurs by Entrepreneurs magazine, and is regularly featured as one of the top 100 podcasts by Apple Podcasts as well. And he is also the president of the Producers Wealth, a wealth firm that assists investors and business owners to implement advanced cash flow strategies. He's also the principal at Producers Capital Partners, an investment firm that helps investors invest in alternative cash flow investments. So he's got so many things moving here. So I just can't wait to dive into what he's working on and how he's also not only helping others, like being able to balance it all together as well. So now I'd like to move into the other piece that MC, you're also expert on, which is the life insurance policies and how you can leverage that to help yourself and others invest even more, even further, quadruple or improve their cash flows. So I have some limited understanding in the space through, some of the educational webinar we've done together. And also I have investigated myself. So there's different types of cash value policies rather than, term life. If I die, my husband would get from my term life policy, just as an example. But with cash value, it's a little different, and there's different types as well. For the listeners who doesn't know much about this, can you quickly, 30 seconds, what is a cash value policy and the different types of it?
Yeah, most people, when they hear life insurance, they think somebody has to die in order for someone else to benefit. It's not a nice, it actually, they used to call it death insurance. They switched it to life insurance through marketing. More people bought it when they changed it to life insurance. Isn't that funny? But most people think that somebody has to die in order for someone else to benefit. And that's how 99% of the population views life insurance, and that's how they buy it. The retail purchaser of life insurance. Then you have a way how banks, financial institutions, corporations, and the wealthiest individuals and families buy life insurance. The person on the street will try and buy the bare minimum, as little as they can for the cheapest. The banks, financial institutions, corporations, and wealthiest individuals and families would buy as much as they can, and they would pay as much as they can into life insurance policies because it's two different worlds. So cash value life insurance is where banks, financial institutions, corporations, and then the wealthiest individuals and families warehouse their cash. They don't put it in banks. These people own banks, but they don't keep it in banks. So when you buy a high cash value life insurance policy, and how we structure it is we use a dividend paying whole life insurance policy with a mutual insurance company, and we structure it using that product very specifically so that the majority of the premiums that you're paying is going to the savings vehicle in the policy, the cash value. So if you put in $100,000, let's just say of premium, 70 to 80,000 of that would go straight towards cash year one. And within 30 days, you get to access that through a policy loan. So why do banks, financial institutions, corporations, and the wealthiest individuals and families, why do they do this? Because the money in there is guaranteed. It's guaranteed to grow. It earns dividends because with a mutual insurance company, you're actually a shareholder of the company through having a policy with them. So that's tax-free. You access the money tax-free through a policy loan. And what you essentially do is you put up the cash value as collateral, the savings as collateral, and borrow against it with a policy loan. That's how it's tax-free. The same way that you would borrow against a stock portfolio. We mentioned Elon Musk earlier. That's what Elon does all the time. That's how he bought Twitter. You also have the growth and the dividends in this policy tax-free. So you'll never get taxed on that again. And the death benefit goes tax-free to your beneficiaries. So what you can do with this policy is you can fund the policy, and if markets crash, it doesn't impact your policy. During 2020, I think a lot of people realized how powerful it was in our network because it was actually put to the test, where people were losing 50 to 60% in their qualified plans and their stock portfolios. Nothing happened to their life insurance policies. I got a lot of emails and calls. Should I be worried? Nope. Still have the same amount of money in there. So they could go then and buy things up cheap. But the strategy that we use is we fund these policies. And then, like I said, in year one, you put in 100,000, there's 70 to 80K in there in cash value. That might not sound great, but 5 to 7 years, now you've got more money in the policy that you've contributed in premiums. In 10 years, in that example, you've probably put in $1 million. There's probably 1.2 million in there tax-free with a death benefit. And you get to access the cash value through a policy loan. So an investor can go and take out $100,000. And what you do is you don't actually draw down your account balance. You get a loan secured by that account balance. So your money is still in the policy, growing, uninterrupted, compounding, uninterrupted, tax-free. And you get a policy loan at 4%. That you now can go invest in a real estate deal. It's paying you a 7 to 8% pref, and you're getting 18 to 20% return on that when you exit in 5 years. So your money is working in two places simultaneously. So it keeps growing in your policy, uninterrupted, tax-free, and then you get to use it to grow your investment portfolio and or your business if you're a business owner. So it's pretty powerful stuff. It's a great part of a strategy, an overall strategy to position cash in where it's doing many different things for you simultaneously than just one thing. I speak to a lot of folks, and when you invest in alternative assets, and let's just say you use $100,000 and you invest in real estate, great strategy. You're going to do very, very well if you just start with $100,000 and do that for 20 years. But how do you put some more rocket fuel on what you're doing? Well, you run it through a policy first, and then you put it in the real estate. And in 20 years, you would still have invested in all this real estate and do very, very well, but you have a policy too that has grown uninterrupted, tax-free. Another thing that you can do with a policy too is I don't have a 401k and an IRA because there's no way I would defer taxes. Deferring taxes is the worst strategy you can do right now. The world is very politically polarized, as everybody can tell. So taxes are going to continue to go up. So you want to put your capital in asset classes where you're not going to be taxed again, or you have strategies that you can use to not pay any taxes or pay very little taxes. So that's why for me as an investor, the combination of this life insurance with real estate, it's fantastic. It's a fantastic 1-2 kind of punch. But yeah, that's how we use it. So most people just think, hey, life insurance, somebody has to die in order for someone else to benefit. We say no. You can structure it like the banking and financial institutions, corporations, and the wealthiest individuals and families do. You could do exactly what they do and enjoy uninterrupted compounding tax-free. Use that money to grow your business and your investments. And by the way, you can keep adding policies in your family too. We have 11 policies in our family. So you can have them for yourself, your spouse, your children, and you can create essentially your family bank in this manner. And that's just following what the Rockefellers do. That's how they do it. The Rockefeller method. You don't have to be a Rockefeller to do what the Rockefellers do. You can do it on a much smaller scale, but you're going to have great results, and you're going to significantly move the needle when it comes to wealth for you and your family.
This podcast is sponsored by Life Mission Capital, founded by me, Missy Liu, where my life mission is to help busy professionals invest well so they can focus on what matters. All my life, I was taught to study and work hard for my freedom. Until one day, I realized that unless I let my money work hard for me, I will always be trading my most precious resource, time, for freedom. Since then, we have also been helping our investors passively diversify into more than 1,000 units of recession and inflation-resistant alternative investments, such as multifamily, mobile home parks, short-term rentals, and more. Learn more with our free ebooks at lifemissioncapital.com.
Definitely. On what you said, there's two follow-up questions. One is, what if the person who took out a loan against the policy, they can't pay back? Is it an interest-only loan and like a balloon loan at the end? Or is it more like a payment with the interest spread over, 5, 6, 10 years? How does that work typically?
It's simple interest, and a loan doesn't need to be paid back ever, but we do in our system, because we use the infinite banking kind of strategy where you pay yourself back. So you pay minimum amounts back. And then when you have windfalls, you get a bonus at work, or if you're a business owner, you have a windfall of cash, or as an investor, you get an exit. You pay down the policy loan because that's where you warehouse your cash now. What I always say to folks is if you have $100,000 in the bank and you put that $100,000 in a real estate deal, would you ever save money again? And they say, well, of course, I saved the $100,000. Exactly. Now, where would you save it? Instead of saving it in the bank, save it in your policy by paying down the policy loan, because it's like a HELOC, right? It's like a revolving line of credit where you don't have to pay down the full loan to access more cash through that credit line. So that's how you can use it. It's like a revolving credit line, which you can pay down, and that's how you save. Put money in a place where you benefit. Don't let the banks just benefit. There's no benefit to having your savings in the bank. There's a benefit for a checking account, online bill pay, online banking, that kind of stuff. But savings, just to accumulate capital in a bank, what are they paying? 0.1, 2%? Put it in a place where it benefits you and does many, many different things for you.
Great. So you mentioned about the 70 to 80%. As a follow-up question, you mentioned about the 70 to 80% is basically withdrawable as cash value within, I don't remember, 30 was 60 days usually. What about the remaining 20 to 30%? Where does that go typically?
Oh, so that goes to your insurance. So you buy the insurance costs, and because you buy the insurance, now you could put the cash into the policy. So you get your life insurance on this too, and you're paying for that. So there's a difference between price, cost, and value. So most people look at it as just price. And then some people could even look at it as a cost, like storing your gold in a huge vault with men with huge guns are standing outside the door. Yeah, that's cost associated with saving your gold and your silver there. You would probably sleep well at night with men with big guns guarding your gold and silver. And then there's an overall value. There's a value to those men with large guns standing and guarding your gold and silver. There's a value to having the life insurance that you just buy there, because you can put your capital in there that has all these other functions, and you can have continuity for your family. Real estate investors don't think about it. And we've seen this many times with folks that in our network, when they first started working with us, they didn't have any life insurance in place because they figured, well, we have a real estate portfolio, all these investments. Well, what if you passed away? Does your spouse know anything about this or managing this? Nope. So, and you might have to sell some of the portfolio. Your spouse might have to sell some of this portfolio if you do pass away, because there might be, if there's not proper structuring, taxes due too. So anyway, so this solves a lot of problems with regards to continuity. So there's a huge value to that.
Got it. So what are some of the profiles of the investors that can really benefit from this versus some investors may not benefit as much from it?
Yeah, you have to put a minimum of $10,000 a year in this to make it work, because it still is insurance. Like I said, you're buying the insurance to put the cash in. Anything less than that's really not going to move the needle. So the profile is, if you have a six-figure income, you can set up this policy, and this could be a different bucket. So there's a lot of folks, and I'm not trying to convince everybody that this is the end all and be all. It's just a part of a strategy. So if you have a 401k and an IRA, those are taxable accounts eventually. They're tax deferred. So you can add a tax-free bucket to this. If you're a business owner that's looking for a place to store capital in a bucket that's tax-free, that's going to keep growing with uninterrupted compounding interest, this is a great thing to add. Same with investors. If you're looking for a place to add capital that's just more efficient, great place to have. And by the way, me having this, I don't feel like I have to do anything. I'm very picky about my deals, and a lot of people, again, have FOMO. I have JOMO because I have my system. I have the joy of missing out because I don't feel like I have to do anything, because you hear cash is trash. The dollar is going to go to zero. You hear all these things, and I'm like, I'm earning a nice 4% tax-free compounded, which you have to get 8 to 9%. Dividends are 5.75, but it's a life insurance policy. So I look at it like around 4% tax-free. Yeah, I need to get 8 to 9% in the stock market for that. I'll take that, and I'll just sit on that and ride it out until the right deal comes along. So it's made me a better investor too, because my cost of capital is 4% too. You have to think about that too. Most people don't know what their cost of capital is. So if my cost of capital is 4%, how do I invest in deals? Completely different way to look at a deal. So I don't swing the bat at pitches that I don't need to swing at. I'll wait for the right one patiently.
Awesome. Anything else you want to add about life insurance in general? Like, is it easy to get structured, run this cash value policies?
Yeah, I have a webinar. If folks are interested, I pack everything that you need to know in about 34 minutes at yourownbankingsystem.com. If they work through that, there's a link there to fill out a form and schedule a call with myself and my team, and we're happy to explore options for you.
Awesome. Is that also the best way to get in contact with you, or is there another way as well?
Cashflowninja.com is where everything is at. And the best way to get in contact for the life insurance is yourownbankingsystem.com. So cashflowninja.com, there's 900 podcast episodes there. And we've got a ton of stuff going on. And then yourownbankingsystem.com is the best way to learn more about this life insurance strategy.
Awesome. MC, I think that's it, unless you have anything else to add.
No, that's it.
Wow.
I think I'll leave everyone with one thought. Have a strategy. Tactics is one thing, but as an investor, have an overall strategy, because we're living through very, very interesting times. I see people argue about this is better than that. I have cash. I have gold and silver. I have a cash flow portfolio with real estate, with oil and gas, with life settlements, with resorts. And then I have some asymmetric investment opportunities, which is where there's many distortions in the markets. So energy is a great one. Governments have messed up energy so bad all around the world, especially in the West. I didn't think that people could be this, they're either very ignorant or very stupid. I have to still figure out which one it is. But energy has been a great asymmetric investment opportunity where it's essentially been like the crypto of the investment world the past 12 to 18 months. Oil, gas, coal, nuclear, which is uranium. It's been nuts. So, but have a strategy, know what you have, why you have it, and what it's supposed to do for you, and have a well-rounded approach to it. And the insurance part of it is where I warehouse my cash, and you're going to need cash. And there's been so many people saying, oh, cash is trash. MC doesn't know what he's talking about. And then all of a sudden the crypto market crashes and all these folks are crying because they leveraged the crypto and they didn't have access for cash when they got margin calls. Or you need cash for your real estate deals. So you're going to need it. It's the glue that holds everything together. You're going to need it when markets come down and you go shopping.
Great advice. For sure. Thank you so much, MC.
Thank you so much for having me.
Thank you so much for tuning in to the American Dream Builder and Investor podcast with me, Missy Liu. We hope you enjoy the tips and tricks that others have used to build their American dream and their trinity of freedom. We would love for you to subscribe and leave a rating and a review. You can also find all the episodes and details on lifemissioncapital.com. Until then, let your life mission go wild.